Hello, this is Caleb Barney, local real estate agent in the greater Cleveland area, and today I wanted to go over an article from Keeping Current Matters titled Some Experts Say Mortgage Rates May Fall Below 6% Later This Year. Basically, there's a lot of confusion in the market about what's happening with day to day movement and mortgage rates right now, and that is something that actually a lot of people I've come to realize do not or did not understand that the mortgage rates they move not only day to day, but they move within the day, and and what a lot of people they'll ask, hey, what are interest rates doing right now? It's tough to give them a straight answer because there's so many different variables, including their own personal you know qualities or qualifications, basically what their credit score is, what their income is, what their assets are, what liabilities they have or debts they have, different things like that, as well as what's going on in the market, what type of loan they're using, different how much money they're putting down. There's so many different factors. So that being said, what you really need to know is that interest rates they did peak at about 8% in the third week of October in 2023. So depending on if you're using Freddie Mac's, guidelines, or if you're looking at, Mortgage News Daily's, estimate for what the 30-year fixed rate was, you were somewhere between 7.9 to, just over 8% near the end of October of 2023. And mortgage rates, they actually dropped pretty considerably since then. So right now they're probably just over 7%, depending on what your financial situation is. But overall, what a lot of experts are saying is that they're still expecting rates to go down throughout the year. Now, this isn't going to be a linear decrease. And again, that's where I like to emphasize that there's day-to-day movement in mortgage rates, and sometimes it goes up, sometimes it goes down. And a lot of that is going to also depend on what the rest of the economy is doing. So, for example, this article actually just came out from Keeping Current Matters, but they are using the example for for Fannie Mae's mortgage rate projections for when they made them in December of 2023 and when they made them 1 month later in January of 2024. And Fannie Mae revised their projections for mortgage rates down pretty considerably for every quarter. So they went, they were estimating Q1 of 2024 was going to be about 7% interest rates. In January, they revised that down to 6.4% for Q1 in 2024. Q2 at 6.8 versus 6.2, and it continues to go down and down to the point where Fannie Mae is actually saying, hey, by Q4, fourth quarter of 2024, we might actually see interest rates below 6%. So that's pretty cool that they are projecting that. I actually don't see that coming. And one other item of note, since their projections were in January, over the past week and a half or so, we've had inflation data come up for CPI and PPI, and unfortunately, the inflation data came in worse than expected, and unemployment is still very low as well, so it's still a very strong job market, which oftentimes when you have a strong job market, people are spending money, and that's going to keep inflation a little more elevated than what the Fed wants to see. So with that being said, interest rates ticked back up over the past week and a half, which, I'm recording this February 23rd. That doesn't include, obviously, what Fannie Mae was projecting when they made their revised projections in January. So will these numbers change again? Yes, they will. And again, these are just projections. Nobody has a crystal ball. So what they say here, it's normal for experts to reforecast as they watch current market trends and the broader economy. But what this shows is experts are feeling confident that rates should continue to decline if inflation cools. Again, that's the big one. If inflation cools, rates should continue to go down, because basically what happened with the latest inflation data is that all but guaranteed that the Federal Reserve is not going to be reducing their federal funds rates at their next meeting. Possibly they'll do it, a couple of meetings from now, but as of their March meeting, almost guaranteed they're not going to reduce the Fed funds rate. So what does this mean for you? Basically, no one can say for sure what will happen, and short-term volatility is to be expected. So don't let small fluctuations scare you, and focus on the bigger picture. So I agree with this portion completely. If you found a home that you love in today's market, especially where finding a home that meets your needs, or that meets your budget and your needs can be a challenge with low inventory, it's not a good idea to just time the market and wait for rates to drop. Again, I don't like the phrase just because it seems kind of cringy of date the rate, marry the home, but I do like the application or the idea behind it, and that's that, the home needs to make the most sense for you, and you need to be able to afford whatever interest rate you're getting right now. So if you're getting a 30-year fixed rate mortgage, you need to be able to be okay with keeping that mortgage payment, because there's no guarantee that interest rates will go down. That being said, if rates do decrease and it's advantageous for you to refinance in the future, that's where it's most important that you get the home that you want. You're marrying that home, so to speak, and you're just dating the rate, because then you could refinance later. So, don't try to time the market, because chances are if rates do drop, then home prices are going to slightly go up, because every decrease in interest rate means that there's more qualified buyers that are able to afford that home. So your competition, so to speak, is going to increase as rates go down. So focus on finding the right home. Make sure that you can afford that payment. Ideally, make sure that you could stay there for at least a couple of years to have enough equity. And again, ideally, you're putting down a fair amount for your down payment, although it's not necessary or it's not a requirement. It does help protect you in the event of a downturn, or in the event that you have to sell your home much sooner than anticipated. So that's all I have for you today. If you have any questions about the Northeast Ohio market or the greater Cleveland area, feel free, reach out to me, and I'd be happy to help.